What's up? Finesse University back at you with another one. So over the past couple of days, Tesla stock price has gone up almost $300 per share, or around $300 per share. It's about a 20% move from where it was before, which is not a small move. This is pretty good shit, especially for how big of a company Tesla is and how fast that it happened. And that happened after they dropped news that they're going to be doing a 1-to-5 stock split. So you may be wondering, what is a stock split, and why did the stock split cause Tesla's valuation to go up 20%? So now the company's worth $400 million. The company's worth 20% more just because the stock split didn't even happen. It's just because the news of an impending stock split. And I'm going to explain that in this video. So what is a stock split? Well, a company's total value, the market cap of a company, is determined by how much someone is willing to pay for the company. So let's say I have a lemonade stand and I'm going to sell 10 shares of stock, or there's 10 shares of stock in the company. So anyone who owns one of those shares of stock is going to own 10% of the lemonade stand. The price of that lemonade stand stock of one of those 10 shares is going to be determined by who's going to pay the most. So what's the most amount of money that someone's going to pay for one of those shares of stock? So if the most amount of money that someone's willing to give for one of those shares of stock is $10, and there's 10 shares of stock, then the total valuation of the stock is going to be $100. The market cap of that lemonade stand is $100. So with a stock split, those 10 shares of stock are going to be split into smaller pieces. So 1-to-5 stock split, like in the case of Tesla, those 10 shares of stock are going to get split into 50 shares of stock. Now the total market cap of the company doesn't change. It's still going to be worth $100, but now there's going to be 50 shares, 50 little pieces of the company that are able to be bought and sold between people, and they're all going to be worth $2 as opposed to 10 shares all worth $10. And obviously with Tesla, the numbers are going to be a lot bigger. So Tesla, they have somewhere near 200 million outstanding shares right now. And after the stock split, they're going to be closer to 1 billion. So there's 200 pieces of Tesla that you can go out and buy. And after the stock split, there's going to be close to 1 billion smaller pieces. The stock price is at around $1,500, $1,600 right now. After the stock split, depending on where the stock price is at when it happens, it'll probably be closer to, you divide that 1,500 by 5, it'll probably be closer to $300 or a little more than 300, all depending on where the stock price is at whenever they actually split these shares into little pieces. So you might be asking, why has the valuation of Tesla gone up by 400 million if nothing fundamentally about the company has changed? It's just split into smaller pieces. And that's a really good question. I would say that it's mostly hype, just good news. People are looking for any good news, anything to create some volatility in the market, volatility within Tesla stock price. I mean, it's a hype stock. I mean, I'm an Elon fan. I think he's gonna do a lot of great things for humans, period. So I'm a fan. But as far as the stock price, I mean, nothing fundamentally about the company has changed. It's just split into smaller pieces, and people are looking for any kind of hype, anything that's even close to good news. People are going to buy in and raise the price up. You got Robinhood investors and there's people who are buying Tesla just because of the name, and then you got the big dogs, the institutional investors. They're buying too, just to take advantage of everyone else buying in. And who knows where it's going to be, where the stock price is going to be in the future. But after the split, it's going to be down to 300. So I guess there's going to be room to run. But as far as the actual valuation of the company, like how much the company's worth, I mean, the stock split isn't going to do much for that. It's not like they just hit a new deal where the government's going to subsidize the building of their cars and they're going to cut their costs in half, or they increase the revenues, like they're selling more Model 3s and so the company's going to be making more money as opposed to their expenses, and like they're more valuable. No, the company is just now worth 20% more because they're split into smaller pieces. But I mean, you got to ride that wave. If you've been trading Tesla if you traded Tesla the past couple of days and you made some gains because you knew that there was some news, and like shit happens when news happens, so you capitalize on that move, and you've seen stuff like this before, and you've seen your pattern recognition, you've seen stuff like this before, and you make your profit, and that's good. You don't want to be one of those people who just sees some news, some good news, see the price is going up and not know what's going on, just buying because everyone else is buying in, because that's how you end up a bag holder and fucked up and losing your money because you don't understand what's going on behind the scenes. So you just want to, be aware of the shit that's going on. Like whenever some news drops, try to understand what that news means. Whenever you see a setup that you've seen before, just set your stop losses. Don't let it get out of control, and just work on developing your strategy so you can find those plays, those familiar plays that you can be consistently profitable on. So yeah, that's my take on the situation. I don't think it's not going to do anything major to the stock price long term. It's just splitting the stock into more pieces. And you could argue that now, people who didn't have $1,500 to spend on a share of Tesla have access. Like they have access to investing into Tesla, and they could get ownership of the company now because the stock is going to be cheaper. It's going to be $300 per share now, and more people can get in. But now, like nowadays, a lot of brokers are offering fractional shares, so you can buy. Now you can invest $50 in Tesla even if you don't have $1,500 to buy a full share of Tesla. So I don't think that's a viable reason or a big reason. I think it's more just hype. That's why the price is going up, and that's with a lot of stocks and the whole market in general. Just like, who knows why the price is going up, but you have to pay attention to the news. It doesn't matter why it's moving. You just have to know that it's going to move, and you have to be able to predict that, or forecast it. Figure out a strategy to figure out why it might move and how you can capitalize it if it does, and cut your losses short if it doesn't. So that's about all I have for you today. If you got any value, leave a thumbs up. I really appreciate it. Subscribe to the channel. Leave a comment if you have any ideas for any future videos. I'll make them, and I'll catch you next time.